Hey, what's up, traders? Okay, I just wanted to go over today's price action. I had to read today's price action because in the open it was indecision in the market, and how reading price action could have kept you on the right side. So we're gonna see how could price action had helped us determine keep some of the indecision out the market. As you see, we were making lower highs and lower lows. So the money in the market was going lower. Now some individuals will see that this green bar here closed above this pivot, which made a which closed above this pivot. Before I go on, let me explain what pivots are. These dots are pivots highs, and these dots are pivot lows. And basically, what a pivot is, it is a reference point. It is, but just not a reference point like all traders pretty much use some type of reference. Some might use trend lines, some might use Fibonacci, Bollinger Bands, or whatever they use, or moving averages. But these are objective reference points. And at these reference points, what these indicate that it was a shift between supply and demand. These are battle points between supply and demand. And this leaves the mark of who won the battle. So it was a shift here. It was a war going on between supply and demand. And so just as you walk in the sand, you have footprints. Well, that's what these are. Footprints in the sand are, if you want to make it relative to battle, these are the aftermath of a battle. So we know that it was a battle here, and it's leaving the mark of who won. So that's why these are so important. These are show turning points in supply and demand. So some individuals, by this bar, it closed and it made a new high. We closed above, and that's usually a rule of thumb that a lot of traders have. If we close above a pivot, then that is we've made a higher high. So at that point, some traders will be thinking bullish. So usually when traders enter, this is a 10-minute chart of the ES. So usually when traders enter, usually professional traders, they use multi-time frames, so they'll enter in a lower time frame, as I would. So some will be waiting for this red bar back in the lower time frame. They'll be looking to go long again because they look at the trend being violated because we made a higher high. But what price action tells me is, hey, we went up, but that bar that closed above it was negated. So you have to take things in literal meaning. What is the market saying? So just a close above it, making a new high means that more money came into the market than selling. So there was more buyers than sellers. So at the end, it was enough money to make a new high. But at this point, realistically, it wasn't. Not just that we have a red bar after a green bar, that's okay. But this red bar completely engulfed. This was a reversal of the move. This was a 180 bar. So this completely reversed the move, but yet now we have here another reversal. So this bar negated the prior red bar, and then we get finally a green bar that closed above it again. So we say the bulls are in control. Now we have a green bar that closes above the prior high, but yet this green bar is negated by this bar. This bar completely fills the body of that bar. So it's telling us every time money tries to go up to make the high, is completely reversed. And so with this in mind, you would say, okay, in your smaller time frame, this was shortable. So you should have been looking to go short in this area. We are in the area, as we say, of show me the money. We're in an area of where sellers have showed us the money before that they can make this go lower, and that's what they were doing this time. And you would have saw your confirmation in the lower time frame. And so that's basically what happened here. We moved lower. So reading price action would have kept us from going long here and being objective and able to get a short play. Also here we have, as prices came down, we made another new low here. Prices went up here all the way back up, and we made a new low. So it's not just looking at dots on the screen. If that's the case, this dot said I made a new high. But if I'd have took that literally and not in conjunction with reading price, then I'd have been thinking bullish. But at this point right here, this was an area where buyers have showed me the money before that they could. I mean, sellers showed me the money they could bring it prices lower. So when it got back up here and sellers stepped up just as they showed us the money before, they showed us the money again and they made prices go lower. But wait, there's a change. They couldn't bring it lower. So what happened? So bulls are here. Bulls are here and they're armed and they're ready. So at this point, they brought it, but we could not bring it to a new low. So at that point, prices is telling me, whoa, there's some stuff going on here that I need to take notice of. And so then I start paying attention. And yet here, this is where you see volume come in. Now buyers are stepping up, but we haven't made a new high. So should we be going long here? Well, I'd say that over here, we took care of the sellers that were waiting over here. Now here we might have a few day traders, but the big money was taken care of right here by when it came back here. So we have a few day traders, and this volume looked more than just like day trading money. And then as volume increased, then I say, okay, this is a shorting opportunity. Of course, in a small time frame, so you wait for the pullback. And by this pullback, this was, I'm sorry, not a shorting, a buying opportunity. And this was time to buy. So you should have been bullish in this area, looking to go long. And if you would have been successful. And of course, we don't know that it'll make a new high, but the odds dictate it'll make a new high. So if you want to be conservative, you would have bought in the lower time frame in this tail right here, and you could have dumped off a third or 2/3 up here at the high and held the other just in case it would go higher. So this is how price action with no trend lines or indicators, you can just read price. Price tells you everything you need to know. When you trade, you want to keep the trading process as simple as possible. Your brain can only process so much information, so the more things you have on the chart for your brain to process, the more time that your brain is taken away from price. And I used to use a lot of Bollinger Bands and other indicators, but yet I was never focusing on what price was actually telling me. So as someone, I was focusing more on the Bollinger Band. Just too many things I have to cross reference. I need this and that to line up. It's just too much stuff to line up. But just through reading price, trend, support and resistance, I mean, of course, volume, I mean, that's pretty much it. So just wanted to go over a quick lesson. Hope you enjoyed it. See you next time.